All right, welcome back to another episode of Wealthy Expat. Louis, it's a pleasure to have you on the show today. Thank you for joining.
Mate, my pleasure, Chris.
Yeah, looking forward to digging into some topics with you and kind of understanding what we should be looking out for in Australia at the moment, what sort of investments we should be looking for and where, essentially. So it'll be good. I'm looking forward to it. And yeah, having watched some of your recent podcasts, you're in the mojo at the moment. You've got a groove about you, so it's good to get you on the show, mate. And I'm looking forward to chatting.
Mate, thank you for having me. Yeah, no, it is we're ripping and tearing on the podcast scene at the moment. Making big podcast waves. But I hope our advice is, I hope my advice is always taken with a grain of salt. We try to do our best, but no, exactly right.
Exactly. So I guess just before we get started, people that are listening to Wealthy Expat, a bit of background on Louis. I guess I'll hand it over to you, and if you give us a bit of a rundown of where you started your property journey in terms of career and how you've got to where you are today, that'd be good for people to understand, I think.
Yeah, so I started my property career in commercial property, specialising in industrial property. And for anyone listening in the UK or knows the Sydney market or the wider New South Wales market, I was based and specialised in the northwest and Western Sydney industrial market. So we were doing industrial assets right across the board, whether or not they're investments, owner occupied or leased. And so I cut my teeth out in the Western Sydney market, and what was considered probably industrial as an asset class was probably really hot at the time, or it was coming off to be. This is probably a few years ago now, but it was coming off to be probably one of the hottest asset class for a while there. And for really sophisticated commercial investors to look into. Yep. And I really enjoyed my time there. I enjoyed the industrial scene and the commercial scene and what it brought. And it really based my understanding of property drivers and based my understanding of the property markets themselves on more of a data and analytical and research-based type style of investor. So I've always said from day dot that my investment strategies and styles and my advice to people who want to listen, base your investments off the data, and if the numbers make sense, then the color of the door handles don't really matter a lot to me. But in saying that, I've come to I've been surrounded by a team of us who I've taken on more. I've opened my mind to a lot of other styles of investing, and the actual asset itself does matter. But yeah, that's where I started, and I joined the Wealthi team back in the back end of last year. So I've been with the crew now for about 8 months.
Nice.
And moved into the residential side of things now, and I'm really finding my feet and enjoying it.
No, it's good. It's good to see, and I guess like you were saying with the data and analytics, and now doing the investment property, it all ties in very well, and it's I guess drawing the emotion away from the transaction and making it more about the numbers. And I guess much like yourself, I came from a similar background, so that's what drove me to get into the investment property stuff and start working on these markets, and thoroughly enjoying it so far. We're getting
exactly right.
So it's been good to do.
I think that I think that starting out in commercial is probably when I first was looking into the property world after I was coming to the end of my university time. That commercial has probably always been the most media driven asset class. It's always sophisticated investors buying commercial assets, and residential property was always probably had its time. And now I really do think, and I'll probably go into this a bit more later on, but the swing is probably the swing in Resi's favours, I think, happening now. Or I should say the gap's closing, and people are more under the impression that, you can get some residential property and the yields are tightening. So the yields in industrial and commercial assets are really coming short at the moment, and they're almost marrying up in some cases with some resi property. So to your point, I started out in the commercial space, but being in the resi space now, I've really noticed I noticed a shift in gear almost.
Yeah, and it's almost like a synergy now, though. They do, I guess, if for a sophisticated investor, it's having a variety of assets as well, and being across your commercial, your industrial, and having an understanding of that, being able to assist them with buying an investment property now, it all ties in quite nicely, and you understand all sides of the story in a sense. So.
Yeah, absolutely. I think that I think the residential world was always considered an investor for a mum and dad, like a mum and dad investor. It was less what people call sophisticated, or what it was called. What it was alluded to was that the more or less the numbers guys, or the big portfolio funds, or the real sophisticated people would invest in commercial property. And I think that's what kept out a lot of people at the same time, but also is what kept out a lot of high-end buyers, or high budget buyers from the resi space. They always steered towards. And now when we've on our sort of end of things, doing the research and that analytics, and and looking at some of the best portfolios, or the best working portfolios out there in our client base at the moment, and the wider market itself, I truly do believe that having a handful of nice working residential assets under your belt is not only just possibly the easiest form of to getting into the investment market, but at the same time, it's actually, I think the people are reaping rewards. Especially, I know that a lot of people are probably listening in the UK at the moment, and not really sure how much media you guys get from the Australian side of things, but we're in what's considered a boom at the moment, and it's a long-awaited boom, and property prices are surging. So people are really benefiting from having these assets in their portfolio.
That's interesting. I guess touching on the point around the boom as well, we can talk about the areas and seeing where you are seeing the biggest effect from these booms, but is there an area of focus at the moment that you consider kind of number one in terms of being most popular and being the most active? And I'd be interested to hear your thoughts and opinions on that.
I think that in the Australian market, I think the suburbs, there seems to be trends over if you look at the timelines of what we consider a boom period, or the past history, is that your real tier one suburbs, and tier one can be defined in many different ways, but often not, they're going to run first. And especially in the Sydney market, you've got your areas like very, very world-renowned Bondi, Vaucluse, or inner city Potts Point. And you've got these areas mainly in the eastern suburbs, and then obviously there's the North Shore side of things. So on the other side of the bridge, you've got suburbs like Mossman, Neutral Bay, and these areas, and they've always run first, and we've seen some serious price growth in those assets over the past 6 months, even to 8 months. So beginning of back into last year, coming into the new year. But I think the opportunity that I'm seeing at the moment, or I think the opportunity that I really like at the moment, is the areas that they're moving, like they're not stagnant, but at the same time, I can see a lot more potential to grow. Definitely. So, we always hear in the media, or you always hear your first port of call to read data is on the internet, and you hear these property prices are zooming. New South Wales 10%, 15%, and you got to be very careful when you read those things, because some areas aren't running 10%, but I think if you pick the right area of what we're trying to do at the moment, I think these areas have still got a lot of room to move. And so when this boom is it's still moving, and I still think it's going to move for probably the back end of this year. I think it'll always have a correction phase and a cooling off phase, as such as what as most most economic markets anyway.
Definitely.
But in saying that, to answer your question, I think there are some pockets, areas in Victoria, New South Wales, Canberra, and Brisbane, mainly on the east coast of Australia at the moment, that I can see moving probably 8 to 10% over the next sort of 12 to 14 months, and if it does so, that's your investment's going to be really putting some money in your back pocket.
It'll be interesting to see how it does respond once we hit the peak of this boom, you could say. But I guess for the last 6-12 months as well, there's always been that kind of speculation in the market that we were in a boom 6 months ago, we were in a boom 12 months ago, and it always seems to keep on running. So it's going to be it'll be interesting to see when we hit the peak. If we hit a peak, it seems like a market that could keep going at the moment, and it's hard to know. And I wrote an article yesterday about it, but the UK's just ended all their stamp duty holidays over here, and the market's been performing quite well this year. I think it's gone up about 10%, or just over 10%, and just seeing values go up massively over the last 6 months, while people rushing in to take advantage of the stamp duty holiday before it did end. But now we're reopening borders. We're Freedom Day yesterday, so now people are allowed out.
Yeah, exactly right.
Live again, and I think it's going to create a lot more activity in the market. I think you'll have overseas investment coming back in. You'll have Middle East and Russia and Eastern Europeans almost as well. So I think it'll be interesting to see how it responds here. But I guess it's a similar situation to Australia. They're, in a sense, 6 months behind us with reopening their borders, which could happen at the end of the year. But is that going to drive? I can see that driving further activity in a sense. I think you've got China and America and the UK even that are still pumping money into the Australian property market, and how it'll end up responding once the borders do open properly and people can then easily travel in and out. I think it'll be interesting to see what happens.
I think I've mentioned this before, but I think that when this is probably very similar to the UK at the moment because. Or any country really. This is probably possibly the only time in the world's history in the past 100 years that we could all say we've been under the same how do you say it? We've all closed the borders and no one can come in, right?
Yeah,
we're all under the same climate. So the property waves where we've seen have been driven by internal drivers, so interstate migration or people moving to different states in Australia or the UK, people moving to or in and out of London or people, but no one else could come in. So these property prices have been somewhat contestably or argued that they haven't been organic because there's been a lot of government stimulus.
Yeah.
But in saying that, people's confidence in the market, especially in Australia at the moment, they've realised that the property market can still move if the globe's shut. And what I think is going to happen, or what I would say is a very possible chance of happening, is that when we do open up, in the coming say 6 to 8 months, then we see the international side of things. So we start seeing international students arrive back. We start seeing international migration come back. We start to see international migrants seeking work in Australia moving to Australia. So if they're coming out of the back end of a country they lived in during the pandemic and it wasn't handled very well, and they saw the starry light of Australia or the starry light of other countries, and they could see that how we handled the situation and the opportunities that present themselves. I think the second wave of this, I won't say it's going to boom further, but I think that maybe the first stage of what we consider a boom in Australia might have been caused by government stimulus providing confidence. And then now government stimulus and confidence is wearing off, and we're in a bit of a no man's land at the moment where we're going to go next. And now we've got a bit more confidence coming out to the back of the vaccine rollout, and we sort of verge toward the end of the year. We see the rest of the world opening up, and then I think that third sort of wave and attack of international migration and international demand will really push us into the next year when we're trying to review. Say if we look in a year's time and we look back and think what were the sort of the three stages of this boom, and if it doesn't end, I don't know if it's going to end, but I think it's going to be able to it's going to maintain its legs.
I think so, and I guess at the same time you've got people that have bought these investments over the last 12 months that have seen incredible increases in value in their properties, and will now be thinking, okay, that worked the first time around. Let's draw some of that equity out of the property and go and invest in another one, and I'm sure that'll start to happen potentially or it could stay in place. It could be a big driver for the next 6, 12, however long it is until borders are properly reopened. But I think that could be a massive contributing factor as well, which would be good for the Australian economy.
Exactly right.
And and just the results they've seen since the start of the pandemic have been astounding in comparison to the rest of the world. So let's hope they keep it going. I'm quietly confident, you could say.
No, it's I was going to actually ask you a question. We were discussing on the phone yesterday the size comparison of Australia's continent versus England itself, and then the UK, and then the population, the relevant populations. And I think that when I was looking, I knew I was going to have a chat to you, and I was looking at some of the property prices in the UK and what you can buy, and the bang for your buck you can get around London and East London and or Northeast London and a few other little places that I liked when I popped over, when the world was open. And it's incredible to think as a expat, as an Australian expat living in the UK, or maybe even an international investor, if UK, moving to Australia,
Yeah.
price difference in the, because we always talk about it state to state, what you can get in Brisbane versus what you can get in Sydney.
Yeah.
And then if you look at it just on a main scale, what you can get in Sydney compared to what you can get in London, or what you can get in, London versus to Brisbane, then like the gap is just,
it's massive. It's insane. I think. Well, I live in West London. I'm in Notting Hill, so quite a nice area, quite an affluential area. And I think I think there's a massive. London's never going to fail as an investment for anyone. It's one of those places that's going to see continuous growth. I think they predict it's 9.7%. Year or something ridiculous. You're doubling your value every 9.7 years, and it's just there's constant value in London. And I think you pay. I think for somewhere in this area, an average 2-bedroom house, you're looking at about just over £1 million for a 2-bedroom in London. So if you equate that into dollars, you're looking at just under $2 million for an inner city apartment, which is just insane.
Jesus.
But I guess from an investment standpoint, though, you're going to be getting about £2,000 a month, just over £2,000 a month from that investment. So it's still giving you similar returns. But if you can get in for a lower entry point in Australia as an expat, for example, I think the investment makes kind of more as an entry to help you get started. It makes more sense investing in the Australian market for now. But in the same breath, you could see the same returns in places such as Birmingham and Manchester and Liverpool and Leeds. Even they're going crazy. Dad's currently looking at buying an investment property up in Leeds and one in York as well, and they're coming with 10-year assured rents and also and 10% yields and all sorts of crazy offers. So the market's moving quickly over here, and it's good to see. And I think you've got to be careful with some of those 10-year assured rental years. But I think if you've got a strong developer, a strong covenant, and it's a healthy looking project, if it's part of a master redevelopment or whatever it may be, it'll tick some of the boxes. But that market's moving, and the entry point for an investment in the UK, I think I mentioned it to you yesterday, but you could buy an apartment in Preston for about £70,000 to £90,000, and
it's unfathomable.
It's just, I think the mix in what's available in the UK is something that I don't think you see in a lot of places around the world, at least in places like Australia and America and the UK. I think it's an interesting one. It's good though. It keeps the market moving. It helps the economy. And I think that from reading stats yesterday, there was talk about the real estate markets put 10% of the economy's value back into it in what we lost last year. So it's good that it's really contributing and helping support the UK market. So see how long it lasts.
It's Australia's always considered the little brother or sister to the UK, and we've got very close, not in distance, but we've got very close relations, very similar cultures, very similar, the way we conduct ourselves, what our likes and dislikes are. We're very passionate individuals, and I think that reflects. You can't really compare them to apples and oranges, but it's almost like we talk about in Australia what happens in Sydney will happen in Melbourne, and then it'll happen in Brisbane on a delayed timeline almost. And I guess you can put that down to population, employment, opportunity, and key. You can break it down to why these trends happen. But I would say that we're almost on a trajectory as to a UK market, or people are becoming more and more inclined in Sydney that the prices are so expensive that you simply can't afford all these, what we considered once was the Australian dream, the acre block of land with a house on it in close proximity to the CBD is just, you can't, it's not affordable. So I think that the more we, progress into the future, I think that we're going to take on more of a style of a UK investor, and that UK investor is simply happy with an inner city apartment or an inner city terrace. It's what they're known. It's just what they're known, and it's not a stigma now. There's a very anti-apartment stigma in Sydney at the moment, or anti-apartment stigma in any sort of capital city. We still got a lot of land to eat up. We've got a land to buy, so people are going to keep buying it.
I guess that can move us on to the next topic around the house versus apartment kind of topic, and what you're seeing. Has there been more demand coming for apartments recently? I know that house and land lots are getting snatched up rather quickly. It's stock is quite tight, you could say, and apartments are popping up more prominently, I believe. So, have you seen a shift? What's really been happening recently?
I think that on my point, I think the 80% of the population, it's still taking a lot of time to come to terms with that. And apartment developers not only affordable. It's always, apartments are always considered affordable, but it was considered, the shittier investment, to say the least. But now I think that people can see the apartment space becoming. I would never. I think that they're two investments in their own to start off. They're two investments in their own right. I think we had a debate in the office the other day. Would you rather invest in a 500K apartment, 10Ks out of Sydney CBD, 10Ks out of the Melbourne CBD, or would you rather go 45Ks out of the CBD and get a house land pack? You can't really do that in Sydney anymore, but you can get it. We'll go to Melbourne, or go 35, 40Ks out of the CBD and get a house land pack.
Yeah.
And then I think they have positive and negatives of both. I think that there is a more demand for apartments in Sydney or the capital cities at the moment, or Australia as a whole. I think that there is more of a educated opinion and response from buyers now that apartments are really good to diversify portfolios and also provide opportunities for first-time investors to get into the market, because I think that, just taking, for example, we look at the Canberra market, and the Canberra market is something that I'm I wouldn't say passionate about, but I've got a strong opinion about the Canberra. Yeah, the Canberra market is a market that is full. It has got the drivers to assure you that it is going to play catch up. And this catch up, what I talk about is that there is a really vast difference between the housing pricing in Canberra and the apartment space. And I think that Canberra is going to play a lot of catch up games. So talking about apartments, for example, you can get into Canberra at the moment with a 5% deposit on exchange and 5% settlement, meaning that you can pay a 5% deposit, might be of a 500 grand unit, be, what's that, 25 grand?
Yeah.
And then in a year's time, once your apartment is developed, you finalize with another 25 grand. I think that's a fantastic opportunity for a first time investor to get into a really nice development. And it's got really good drivers. The Canberra economy is brilliant. The market itself, with employment growth, population growth, it's the fastest growing population capital city in Australia at the moment. So people are flooding there, and it's got Australia's #1 university. So Canberra University, to what people will disagree with, is actually outranks Sydney University, right, as the #1 Australian uni. So anyway, I'm only going top of line, but to answer your question, I think that there are opportunities that present themselves both in the land space, and obviously getting a chunk of land with a house on it is taking the test of time to realize that, or taking the test of time that it will improve quicker. Yeah. You're going to be able to build some equity. You get a piece of land, and you're not getting airspace as what an apartment is really. But to say that, I think there are some apartment options at the moment that can go punch for punch with some housing options out there.
Quite interesting. And I guess just to give some of the listeners maybe an example of something that we have in Canberra, what would you be looking? Say you had about $600,000 budget. What would you be looking at in Canberra? What could you get for your money, essentially?
600 grand will get you 10Ks out of the CBD, direct access via public transport. It'll get you 2 or 3 beds, 2 bath, 2 car spots. It'll get you northeast facing with a 5% deposit. You need 30 grand to get in, shake hands, sign the contract, and then I'll talk to you later on in 8 months when you got your property keys. And to see something like that happen, which is 500 meters away from the university. Yeah. On level 8 to 10 of a development that's got a pool, a gym, and amenity to entertain a tenant. I think that it shouldn't be frowned upon, or it shouldn't be sort of brushed over too lightly. I think that if you compare what you can get in for 600 grand in Sydney, at the moment, it is a far less of quality, far less of ability to get in, and also you'll be competing with a vast bunch of buyers who are competitive in a city market, the premier market as they call it, and often or not you'll be paying overs for something that you shouldn't have, and that's probably the one thing as in investors should be looking out for.
Interesting. And I guess if we were to think about Sydney and price points in Sydney, what, I guess just as an entry level investment, something that we might be working on at the moment, what would you be looking at? What would you suggest, and what sort of price point and entry process? What, I guess it's not the same as Canberra. It's not such as easy a process. There's going to be
Exactly
more,
right.
more savings. So what would you recommend from that standpoint?
If you're looking to get into the Sydney market, and we'll put the same figure on it. Let's push the budget up to 700. 600 is tough. 700 grand for $700,000 as an investor. First note you need to make is that you're going to have to be happy with something either far away from the CBD or an apartment. It's simple as that. You're not getting a house in the city ring or a wider city ring for under $1 million.
Yeah. Okay.
Now, in an investor looking into the Sydney market, you're going to pay a 10% deposit minimum. Depending on your relationships, but what we see as competitive as it is, a developer's not going to take anything below a 10% deposit to exchange contracts. Once you pay a 10% deposit, you're going to be then looking at stamp duty payable within 3 months. So that stamp duty, actually, I believe it's shorter than 3 months. I'll confirm on that. But your stamp duty is an upfront cost payable in 3 months. In states like Victoria, Canberra, or I believe Brisbane as well, you pay your stamp duty on settlement, right?
Yeah.
So that's nothing you got to worry about. But that's not to say, I mean, I've lived and breathed and grew up in Sydney, so I really do believe in the Sydney market. Like the Sydney market is probably it is the best in the country. But to say that you are coupled with exactly right, and it will always be. It's tough to compete with not only the population but the employment opportunity, but the belief in the Sydney. The belief in the Sydney market really pushes it, and we've seen that happen over the past sort of 8 months. People live or breathe Sydney, and they don't really go elsewhere. So you're competing when you're buying stock as an investor with owner occupiers, and owner occupiers will go that little further and beyond to pay for that piece of real estate that they like because they're going to live in it. And it's not something that you can be paying overs for. But to say what you said, if I was looking to invest in Sydney, I would look for, as a first-time investor, I wouldn't look to overcapitalize. I would look for an apartment that's, an apartment or townhouse that's got great connectivity to the CBD. So, search for a train line that takes you direct access straight to Sydney CBD. Yeah. I would then look at, if possible, getting into a boutique space with not a lot of development happening around it. Like, for example, there's an area in South Sydney at the moment which you can have a look at that we really like, an area called Bexley. It's about 10 to 15k, 10 to 12 k's out of the CBD. Has really good public transport access, a train line straight to the Sydney CBD, but you can get in for your mid-sixes for a 2-bedder. Now, to say that, it probably gives you an example. Bexley is an up-and-coming area. It's well established. Don't get me wrong. It's been well established for tens of years. But in saying that, it's hasn't really had that gentrification as if you're familiar with the Sydney market. It's someone who's listening, not like your Surrey Hills to your Redferns to your Marrickvilles to your Erskinevilles. You head towards Sydney South and you can feel it happening. Like, you can drive the streets and feel like there's a change, but there isn't much belief there yet. And I think it provides a really good opportunity to get into something, to get one, into the Sydney market. Yeah. 2, you've put in the door to the property market itself. If you die, be all end all in Sydney. And also 3, you're not overcapitalizing on something that's going to really push you to your brink for your budget. And if you didn't like the apartment space, well, then you've got to take a deep breath and start traveling 35, 40 k's outside the CBD.
Yeah, definitely. And I guess, and then there's potential to explore Victoria, I guess, in a sense that.
Exactly right. If you're going to take my advice, it would be. I took a word from advice with Tiffy, and Tiffy's been on the podcast before, hasn't she? Yeah, the almighty Tiff. Yeah, she's an absolute world of wisdom, and she told me only today or yesterday. She goes, buy what no one else is buying. So if the Sydney market's hot and the Sydney market's doing this, she goes, go buy in Melbourne. And I think that's a really good tip. They always say, buy low, sell high, or buy what everyone else is selling. So
what's the saying? Don't chase the crowd or the herd or whatever it is.
Exactly right. So I think that if I was to hear someone tell me they had a flip of a coin, they didn't really mind going interstate, I do see there being far more, not just affordable, but stacked up investments and qualified investments in interstate that provide not just only the same amount of returns, but possibly more capital growth and more potential, but you're only spending, your 450s to 550.
Yeah, yes, it's a definitely more affordable price point. And then there's the option to potentially buy two before you're a property mo. You got a portfolio.
Exactly right. Yeah. Then all of a sudden, you're opening a hotel business.
Yeah, exactly, and buying commercial property again.
Yeah, exactly right. And you're looking at the industrial market.
It's good to know. I guess one last question that I'd like to ask: if there was one favorite piece of stock, I guess we just touched on all the stock and you explained your stock point towards Canberra, but if there was a favorite piece of stock that we have on the books at the moment, what would that be for you that you'd like to go and buy all of it if you could?
If I could? Geez.
Put you on the spot.
You know what? I'll give you three options. Three options. I think number one, let's put a budget on it at 650.
Yep.
600 grand. Number one, I would buy a piece of land in Victoria with a brand new house on it for sure. I've tossed and turned over this. You can get in for a brand spanking new house with a nice, not huge land content for a first time investor. 300 to 350 square meters. A brand new house, 35 minutes out of the Victorian CBD. You've already got a train line access. The government's committed to over $40 billion of infrastructure connecting the outer suburbs of the Melbourne CBD with the new airport rail link in a well-established community that's got recreational facilities. It's got educational facilities. It's got already committed, primary high school with already a university there. It's got the amenity already embedded into a community hub with access to a train line, and you're getting a piece of land, 300, 350 square meters for 500 grand. To me, that is right there. It is a no-brainer if you wanted to get into the space as a first-time investor. And then if you look at, we had a client of ours who bought up a lot, and this was their sixth property, placing. So it's not just for your first-time investors, but at the same time, I do see a really, really valuable opportunity getting into this piece of property. And please, if you want you want any more details about it, let us know.
Yeah. No, that sounds like a good one. I think Victoria is going to be an interesting. Those areas just outside of Melbourne and having that connectivity through the new transport links that are going in, and finally linking a train line to the airport.
Don't have to get an Uber out of there.
Yeah, exactly. An Uber or a bus. It was always a hassle. So that'll be, I think, a lot of areas around the outside of Melbourne and even down towards Cranbourne and stuff. I think you'll start to see the peninsula as well. There, some things will change. I think we'll start to see an influx of activity down there. So,
no, 100%. I think that if you just look at it from a geographical sense, like if you look at Sydney and you put Sydney if you're looking right on a map and you put Sydney, it could have only gone, Sydney was here, it could only go west, or it could go, south, and then but everything has to push inward, right? To get further away from the beach is where our for most of our CBD is essentially located, about 15, 20 minutes outside of Bondi. Now, if you look at Melbourne geographically as a CBD, it's at the bottom of the peninsula. So you're going to the property ring that goes around. So there's been a lot of opportunity at the moment to not have to go further and further and further away from a CBD for affordability. There's lots of pockets that were really sort of coming to its own, and they're getting eaten up really quickly. So if you look at the Melbourne outskirts now, and 10, 15 Ks out of Melbourne, which once was a distance for Melbourneites. That once was you're not living closer to Melbourne CBD. Now it's, moving and moving and moving. And we're seeing amazing developments in Mill Park to Melbourne's north. And we're seeing fantastic developments down in Wyndham Vale in Melbourne's southwest. And these areas are still not just only affordable, but you haven't got that you haven't got that journey of 50 minutes to an hour to a CBD. You're still 35 minutes, via a car, or 40 minutes on a train. So
yeah, that's not far at all. When you put it in terms of London transport, that's easy. I do that aptly every day. So
yeah, there you go.
I think that's something you can live with. So it'd be good to see how it does evolve and expand out of Melbourne. But definitely plenty of potential there. I guess to wrap it up, let's, as this podcast we always do, we get the guests to give their perception on what wealth means to you, or what a wealthy lifestyle means to you. I guess or bring in some tips of how you think you should start your journey. But whatever it may be, what is your approach to that sort of topic?
Okay, wealth is of course happiness.
Yeah.
Wealth to me, I reckon it is financial freedom. Not having to do something that you don't want to do every day for the rest of your life. And also, my personally is to be able to provide for a future family if there may be one, or give mum and dad funded my upbringing and put me in school and whatnot, and until I was old enough to pay for myself. So the back end of their time after they've retired, I'd love to be able to fund their whatever they need and want, even though I'd like to do that for a lot of people. But that's what my top of the line wealth is. If I had a tip, and investors, expat investors overseas, if you grew up in Australia and you know Australia well, investors in Australia and you're living here currently and you're thinking about buying property, I would take, I think this generation is the instant gratification. I'll take that from Sam Assad. He always harps on that about me and my generation. But instant gratification. So you think you're going to buy something and it's going to be diamonds and gold from the minute you buy it, and it to improve for a year's time. But in saying that, I think one tip I've learned over the past 12 months and something that I've seen where the most investors win and the most investors reap the most rewards is they take the ego out of it. They invest in a piece of real estate that's not, glitter and gold or made of diamonds. It's a piece of a property that may be on paper or maybe to their friends and family, not glamorous, but at the same time, it's, with the end goal in mind of building a portfolio and buying that, forever home. I think that taking the ego out of it and making sure the numbers align correctly, and then I reckon you've got a pretty red hot chance at making an investment that's going to work.
I think that's a great point. I think it is. I think it has a lot to do with the ego, the emotion, and dragging too many opinions into it as well. Just
exactly right.
And if the numbers make sense for an investment and the location makes sense, and you can see the future potential in the area, then why not take the risk?
And a bit of hope and a bit of belief, and
exactly.
You should have but you're exactly right. I think that there are some investments now that are. Everyone talks about the Sydney market as you can't afford it anymore, but I think there's definitely affordability. It's just that you got to poke your nose around and search a little harder.
Searching areas that you wouldn't have initially considered at the start, you could say.
Most definitely.
Pushing out. Well, awesome. Well, Louis, it's been great to have you on the show. Really appreciated it. Been a good chat. So hope everyone listening's enjoyed it, got some value out of it. And if you have any questions, please feel free to reach out to Louis and I. We're always more than happy to help and have a chat. So look forward to the next one. And thank you again, Louis. We'll speak soon.
Thank you, Chris. Thank you very much, my man.